Hello. Hello. How's everyone? I haven't been recording for the past few days. Just focused on trading, learning stuff, trying to backtest, trying to learn some strategies, finding somewhere that I can actually trade, etc. etc. I got introduced to a couple of pretty important people. So yeah, today we're just gonna be looking at trading strategies and some of the ones I want to do. First, we're going to be watching this.
It is a tool that displays horizontal Fibonacci retracements. It is a tool that displays horizontal lines based on the Fibonacci numbers. These lines can then be used as key support and resistance levels. To use the Fibonacci retracement tool, you first start by identifying a swing low and a swing high on a chart. Then, drag the tool from the swing low to the swing high. Next, wait for the price to make a pullback to one of these levels, ideally the 0.382 Fibonacci level, because that's the most common level where price tends to reverse from. So if price touches that level, that could be a good buy entry.
Swing low, swing high. And it did exactly that. Look at this. Now what the fuck these other iron barrels is? What the fuck? Okay, and it did exactly that, as you can see right here. And in fact it did reverse. I mean, wait, let's see. What RR is that? Let's see that. It was short right there. Reverse. Put the stop loss like small. And put the target at... That's 3RR, 2RR is like right here. That's insane. Damn. Profit ratio. Nah, 2.4. Nice.
Keep in mind that price could also reverse from other Fibonacci levels. Combine it with other confirmation signals to get a better entry. Breakout patterns. It is when price makes a sudden and significant movement towards one direction. This usually forms after the market makes a consolidation period.
Let's look at like the 5-minute chart. I'm not sure what I'm looking at here, to be honest. Let's put this on to like the 1 minute time frame. One. Put out like 0.1, it's not possible. I'm pretty sure it is. Yeah, reversed perfectly. This is wow.
For example, here we can see that the price is consolidating. Then, it suddenly moves sharply to the downside. This is called a breakout. To take advantage of this, traders could use specific patterns as a guide to identify breakouts before they happen. Most notable breakout patterns includes wedges, triangles, and the rectangle pattern. Reversal patterns. It is when price moves in the opposite direction of the current trend and forms a counter trend. Specific patterns could be identified in a chart which could help traders predict reversals before they happen. Most notable reversal patterns are double top and bottoms, triple top and bottoms, head and shoulders, cups and handles. Elliott wave. It is a theory that suggests
I'm pretty sure I listened to this video like 3 times already. Give me just a sec. Okay.
that market tends to move in a series of 5 waves before reversing and forming another set of waves in the opposite direction. By understanding the Elliott wave sequence, traders can predict where the price is heading by following the pattern. In a chart, we can label each point of the waves as 1, 2, 3, 4, 5, and ABC.
What's the matter where I'm from? No, it's just random BS. It might be fake, but well. It was 2 p.m. Let's see if that actually hit, for example. Now you move this over to my time. 3318, 2 p.m. It was not 3318. 3318 is like all the way down here. What the fuck? 3318. What the hell? Break even. Oh, okay. That's what I been yesterday. June 9. What the fuck? Okay, well, it's like a 5-minute chart. Let's go to June 9th. Okay, let's go 2 p.m. Was that right there? Okay. So, you guys didn't see anything. It might be a little blurry. Give me a sec. Focus. There we go. Stop loss 3323. So like, and there, 3, 3. So up here, yeah, nothing really happened. Okay, well. Damn, what the fuck? Wait, 50. I've seen this online. Just reading the chat right now, just so you guys know. Damn, that's nice. Damn, nice. Thank you. Yeah, give me back to yes, thank you. Anyways, what do I do? I'm not really gonna be starting challenges yet. I just wanna see what the hell does this mean. One assignment to get that. 2 assignments. Okay, so let's say 1 grand. So I gotta make $300, huh? Wait, so 10%, that's like $100. Okay. I never pay us $10. Challenges. Net profit 80%. Right? Rapid, regular. Damn. 20 bands. Okay. okay. Interesting payout. 69,000 in one fucking pay. This guy rub selling. And that's crazy. Our leagues. Oh, this is interesting. Like, oh boy. The fuck was that sound? Oh, okay. Anyways, yeah, let's get back to this.
Now, there are specific rules to ensure that a
You guys can
movement
see
is
me.
considered as a valid Elliott wave. First,
I don't
Wave
want to
2.
learn about Elliott wave. I don't care about that.
Fair value gaps. A fair value gap occurs when a candle forms a significant gap due to an imbalance of buying or selling. To find a fair value gap, you first need to find a candle with a large body.
Okay, let's look at a fair value gap right here. So, this is a fair value gap, isn't it? Small one. Rectangle. No, wait, what? On the brush. Rectangle. Right there, that's one, that's another one. But for example, wait, look at this. This was a fair value gap, wasn't it? Like from... Wait, what? I'm not sure, like, what? I want to...
Then, draw a rectangle at the gap. Place it between the previous candle's wick and the next candle's wick.
Oh, okay, I understand. So yeah, this didn't really get respected in my opinion. Like, what the hell is this? We're looking at a 5-minute chart. If we go to like a 4-hour chart, what the hell is this chart, man? I gotta turn this off. I don't want to look at this. Like for example, let's see like a weekly or like a monthly. Let's go to 1-day chart. Let's see like a daily. So for example, yeah, that wasn't a purpose again. For example, this was, right? And when I fell down back into it, it kind of respected it, I guess. So I blew it. So what the fuck am I looking at? Why they started? Okay. Anyways, let's just go listen to it.
Wick. This level now acts as a potential magnet, where price may revisit before continuing its movement.
One sec. And the front is fine. My friends. Anyways. Give me a sec, I'll be back in a second. back.
Candlestick patterns.
I don't want.
It is
I'm
a
not
technique
listening to this.
which tends to give less noise than a traditional
I can actually am not
Fibonacci
listening to that
retracements
either.
to
Bullshit.
real market price. Moon phases.
Fuck no.
It is
What?
Renko.
I'm stupid.
Advanced price patterns that follow. These are key levels that formed horizontally where the price has bounced off in the past and could possibly bounce again.
Okay, well, let's go down to like the 15-minute chart. Let's reset chart view. So support and resistance. Not really seeing that, if I'm gonna be honest. So it's around like 7 p.m. I noticed that a big move happens every day at like right now. And recently it's just been to the downside. So what if we just, let's say, open a long position, reverse that bitch. Okay, 20 RR, the fuck. I don't know what the hell I'm doing here, to be honest. I'm just like, fuck it. I don't know what the hell I'm doing here.
And in the future, if the level is below the price, it's called support, where you can take a.
Right, so. But yeah, this support, it's like not equal, like it's like. Okay, wait, so we broke through this line right here, which was the support. Okay, so this is support and resistance. So this is support. Let me just draw a line, a horizontal line right there. Okay, so let's slow this down. So yeah, so and this was the other line, I think. If we break this line, I think we're gonna continue going down. If we touch it, so yeah, so we're in a downtrend. So let's place the order. Let's go sell. Stop loss. Not a break even cost. Stop loss. Put that bitch up here. That's 2459. 2459. Put the take profit down at this level. 2366. 2366. Save. We're risking 1. 3 RR. Let's see how this plays out. I was wrong or if I was right. Pretty sure I'm wrong here. But I mean, I guess we'll see. Or just consolidating. What the fuck, hurry this shit up. Man, what the fuck? This is consolidating. We're not going anywhere. We're literally just consolidating. Yeah, I just broke my stop loss. Okay, fuck off.
Buy position if the price approaches it, and if the level is above the price, it's called resistance.
I'll try and understand.
Where you can take a sell position if the price approaches it. Dynamic support and resistance.
Anyways, yeah, we'll stop with that. Let's go to TGR.
What's good? Welcome to boot camp day fucking 10, I think, right? Yeah, I think day 10. So you guys know that last day that we talked about trading, we were talking about liquidity, just kind of what it is and why we would want to use it in the market. So this is liquidity part 2, okay? And this is just going to be how to spot it in the market and where it lies within the market. And then finally, right, I want to take it like one step at a time so you guys can like have time to process and like understand what's going on. And then after all that goes down, then we will be able to get into how we can actually take trades off of it. And then if that doesn't make sense, don't worry, because we will have way more time to discuss strategy and actually executing on trades once we start learning more things. Okay, so today we're going to just talk about where it lies and then pairing that with, why we want to know where it's at.
Are you tired of your boring old skins?
Suck my dick.
So understanding it, and then from there, like it should be kind of self-explanatory as to how to take the trades, but we'll still discuss that in 2 days. So, right, let's do a quick little overview of what we talked about, why we want to use liquidity. Number one, that's where orders are going to be filled, right? That's where the banks are going to be moving the market. That's where they're going to be able to fill their orders and actually push market in whatever direction they would like to. Okay, and then again, how do they get these orders to be filled? They have to have people exiting the market, and then they also have to have people going in the opposite direction of them, right? Just like we said 2 days ago, it's an exchange. If they need to fill millions of orders, they need millions of orders to be going in the opposite direction. So that leads us into today's video, talking about where liquidity lies. So where are all those people going to be going in the opposite direction of the banks and institutions? Okay, where and who is stupid enough to do this? Where is it happening? When is it happening? All that good stuff. Okay, so let's just talk about, right, basics. Remember, when we talk about trends, how do trends move? Higher highs, higher lows, lower highs, lower lows. So it's safe to assume that traders, like retail traders, will see, higher high, higher low, higher high, higher low. They see that it's trending, right? And they know that the trend is continuing when the high gets pushed above, right? Confirming that there's going to be a higher high, right? So what most retail traders do, what most retail traders will do is they see, higher high, higher low. They see that the high gets pushed above. They either have buy stops, which is literally just pending orders right above the high. So, right, the price point would be like right above here. And when that gets hit, boom, order gets executed, they get filled, okay? And they're assuming that price is going to continue in that trend, okay? Now, on the contrary, there's also stop loss orders right above these highs as well, right? Because there's people that are trying to short this down move, which isn't necessarily smart, right? You want to trade with the trend, which is what the people that are buying up here are trying to do. But there's also people who are shorting within here, right? And if we know, right, same thought process, right? When people are shorting, they know that their idea will be invalidated if price pushes above this high, right? So they would be exiting the market if this price point gets hit. Okay, hopefully you're starting to understand and see what I'm trying to get at with this, is that when this high gets hit, when this high gets pushed above, people are getting out of the market and people are getting into the market, which is essentially creating liquidity for the potential for these banks and institutions to fill their orders to change market direction. And you're probably saying, well, TJR, if price pushes above a high and people get stopped out, and then also people are buying, that means nobody won. Exactly. They literally liquidated all of those people, and they aren't right, because right when it pushes above, people buy, right? People are buying, and then boom, gets taken out. Their stop loss is right under here, right? The people that got stopped out, they get stopped out by a couple pips, and then boom, market moves in their favor. That's why trading is so difficult, because lots of people are trading like these retail or like just these basic ways to trade, and some people are successful with it, but I genuinely think that they're successful because of their experience in the market rather than the way that they're actually trading, and that's why I really like playing off of liquidity and understanding that. So, right, we know that there are going to be stop losses above highs. We also know that there's going to be buy stops above highs, so that means, boom, when these highs get taken out in an uptrend, right, there's going to be people going long, there's also going to be stop losses above there, right? So when that happens, right, that gives the banks and hedge and these institutions the opportunity to fill their orders and then send market in whatever direction they want, which is usually to the downside. Now let's talk about it in the other direction, right, in a downtrend. It's the same thing, just vice versa, okay? When lows get taken out in a downtrend, people are going to have sell stops, right? They're going to have sell limit sell stops down here, right? Because they know when a low gets taken out, odds are the trend will continue, okay? So, right, and we talked about during our trend session, or our trend video, trends don't last forever, right? So that's why when we use liquidity, we're able to catch the top of a downtrend or the bottom of an uptrend, because we are literally getting into the market. I got my friends talking outside, so I gotta mute them out. But we are literally getting into the market at the beginning of a trend, and that's why we're able to catch these big moves, okay? So when we see that happening, okay, we take note of it, okay? So we know that underneath lows, there's going to be sell stops, and then again, on the contrary, the people that are trying to catch a buy on this like mini little move up, their stop loss is going to be underneath the low. So right, when that low gets taken out, okay, in a downtrend, people are getting liquidated, people are also going short, taking sell positions here, and then that gives market the opportunity to fill orders within here. Order block, we'll talk about that later, right? Right, this whole thing would be essentially an order block. I don't want to get you guys confused, but right, this move down here is what causes the liquidation and then allows market to fill those orders. Okay, so let's go into the chart and actually show examples of this now. And it's very, very easy. Literally jumps off the page, look. Okay, uptrend, what's this? High, boom, sweep, downtrend. Okay, we're not gonna get too analytical with it, and guys, this happens on every single time frame. Okay, right? Uptrend, sweep of the highs, collapse. Okay, this happens on every single time frame. Every single time frame. Ready? Let's go to the daily. Let's go on the S&P. There's great examples of this on the S&P 500. What's this right here? This is on the daily time frame, guys. We have highs right here. Boom, push up, takes out liquidity, big sell off. What's this right here? We have highs right here. Boom, market pushes up, big sell off. Dude, so fun. So easy, man. It's very, very easy, and it's super, like you're going to be able to see this on every single time frame, and so that's also what your homework's going to be. Is literally.
Wait, well, he's talking about that. Let's find an example. Let's go to like MNQ. Oh my days. Okay. Yeah, 500. Look at the 15-minute time frame. So I mean, he is right. Look, like I'm gonna need to put this. So yeah, I just thought boom, sell off. I hate what the fuck is wrong with this chart, man? I can't see half of it, bro. What the fuck? Okay, what the hell am I looking at? Seriously. Actually, yeah, that you can see that very well right here. Look, boom. Psh. Why are these charts so fucking weird, man? And the X is, so it's like moving, but how the hell are you supposed to be trading this? Yeah, but MNQ looks fine. Like, what? I'm just not seeing much move. Okay, well, like, yeah, look. So, yeah, so this guy right here gets swept, boom, sell off. So, I don't know. You gotta look at a bigger time frame for this to make sense. But like, yeah, right here as well. I get swept, boom, sell off. Right here as well. It wasn't really a sell off, but yeah, whatever. Right there, for example, this is the prime example, boom. This high right here gets swept right there, boom. This high right here, boom. But could I identify that in a chart? For example, okay, I could have right there. Let's go. Okay, so wait, so we might want to wait for this. This seems like consolidation, but let's suck my dick. So yeah, so let's wait for this high right here to be touched. Okay, well, we're on a 1 minute time frame. Let's look at the 15-minute. We're in an uptrend, so I'm not gonna be trading against the trend because fuck that. I don't care. You see, we would go buy, stop loss, take profit. We can put the stop. We can go down to like 15-minute. But the stop loss right here, that's 2483. And we can target, well, since I can't see before the chart, 2560. And we'll be risking 1%. Let's go. Maybe up that stop loss a bit. What the fuck? What the fuck? Why did that happen? Like, what? Why did I just instantly do that? I mean, yeah, it hit. That's amazing. So yeah, now we will place order. We will go sell. You're risking 1%. We can put the stop loss like 930. But we can short it for like 2600, I guess. Yeah, 2600. Alright. Let's see this. Are we gonna be doing what I thought we would, or are we gonna disrespect that high? Are we gonna sell off, or are we not gonna do that? Let's see. Oh! Okay, shit. It's doing exactly what I thought it would. And then yeah, touched it again. It was so close to hitting my take profit. It was like, it basically edged me. And then we broke the stop loss. Okay, but yeah, it was like literally like $50. I could have taken that. But yeah, okay, so that's true. Okay, what the hell? Let me go back. Medina, Medina. Yeah, I mean, it does follow the thing that he said. It's a high and there is a sell off. Okay. Not you.
Just finding these situations where a high or low, a high or a low in whatever trend it's in, gets taken out, and then price rallies. Look, okay, ready? Once. Want to see something crazy? Look at this. Low, low. You're probably saying, no, it's just going down. Wait a second. Go to the monthly. Sweep. Liquidity got taken out. If we go to the yearly time frame, that is a massive liquidity sweep, right? What's market probably going to do? Probably going to reverse. And that also coincides with the US dollar being extremely weak right now. It's actually amazing how these markets move and how these markets work. Ready? And again, I don't want to get too deep into strategy, but this doesn't only happen on these high time frames. It happens on literally every single time frame ever. Okay, so if we go on to like find where market opens, or let's actually do it on like GU. Let's find let's find like boom. Okay. This is Asian session, okay? I don't want to get too deep into this because this is, again, we just want to talk about liquidity and be able to spot it within the market. But as we can see, right, we have a mini downtrend, right? We break structure to the downside, take out these lows, rally, we break structure back to the upside, price pushes higher, okay? Like it.
Guess yeah, low key would have had that. I mean, I'm sure that I said. I mean, would have had. I mean, it would have taken like hours, but I mean. No. How does swing trading mean?
Like we can find this type of shit on the 15 minute as well. Okay, and when you guys get good at it, when you guys get good at like spotting this, it should be like super easy to see and understand where this happens, right? It should just jump off the page. Boom, sweep, fall. Boom, sweep, fall. Let's try and find something to the upside. And the reason why I love this is literally, boom, sweep, rally. It's dude, like when you guys start to see this stuff, like it literally jumps off the page. Sweep, rally, and then what does it do?
Yes, sir.
Nemo. Pa ne znam, mislim, pa planirao sam zbog tebe. Okej, poneći. Pa ono što je koristim za setup. Okej, doneću ti. Nema na čemu, kad to, pa dobro, doneću ti ja to malo kasnije onda. Važi me, Maja, volim te, čujemo se.
I'm gonna finish this video and I'm gonna end this video because I wanna go rest down for like few minutes. I'm a little tired.
To the upside. Sweep, fall. It's how the market moves, you guys. The market is unable to actually move in the direction that it wants to without taking out liquidity to fill the orders. Okay, this is why I love the way that I trade, because it literally makes sense. You are not playing off of a floor getting bounced off of, or it's touching the ceiling, so it's going to go down. No, we're actually understanding why the market is moving and when it wants to move in whatever direction. Like, this is literally going to be your homework. I don't really have much else to say on this video besides open up your chart and literally just go on. Okay, yeah, sure. We can literally just call it right here. Open up your chart. This is going to be your homework. Okay, open up your chart. Go on.
Damn, what the fuck?
Three different time frames and find 5 different liquidity sweeps on 3 different time frames. Okay, that's all you need to do. Okay, do it on whatever time frames you want: daily, 4 hour, 1 hour, 1 minute, 5 minute, 15 minute, because you will see these happen time in.
As you said, I'll be making another video later today, probably like an hour or two, and I'll post them both together for today. I just want to like chill for a bit. I've been in school. I haven't taken like a minute of rest since like 7 a.m., 8 a.m. this morning. But yeah, there's a reason I wasn't posting. I didn't let you guys know. Is I had stuff to do in school, and most of my grades are finalized now. So there's only a few more, but I'll do that. It'll be fine. I have 8 grades this week. What the fuck? Vazi, okej. Vala inte John. Anyways, yeah, let's finish with this.
In timeout, bro. Like, look. Sweep, push. It's not accidental, and it's funny because like you could say like, oh, like you're just cherry picking. Like it's all over, bro. Trust me. When you guys do your homework, you will see that this shit is everywhere. Like, it's very, very apparent. And it's super, super easy to see. You can even put it on the weekly, bro. Fall. What happened right here? What happened right here on the monthly time frame? Oh, there's a monthly low. Sweep. What happened? Breaking structure to the upside on the weekly. Rally. It's not accidental. And it happens on every single fucking time frame. And guess what? Guess where we're at right now? On the monthly time frame, at a big high. This candle is yet to close. Okay, this candle is yet to close. It has 28 more days. My guess? Oh yeah, we got some liquidity, and in just having some knowledge about the U.S. market and the U.S. economy in general, I wouldn't be surprised if we do just down into the fucking pits. Okay, so
S&P was at 4K while the one was recorded. It's at like 6K now. Wow.
That being said, now we know how to spot liquidity. We understand what it is, and then in 2 days we'll get into how we can like take a trade, okay? I don't want you guys to be like, I know liquidity, I'm gonna take trades, because it's not just liquidity. You need to know a lot more than just liquidity and breaking structure to be able to form an actual bias and be able to take a actual high probability trade. But this is going to get you guys to the point where you guys can start spotting this on the chart. And there's a reason why we introduced this concept first, because it's the hardest one to grasp. And it's the hardest one to grasp, but it's the most useful one to understand. Okay, so once you can understand liquidity in the market, it's wraps, bro. It is literally wraps. It is wraps. Okay, so with that being said, your homework: choose three different time frames. Five examples of 3 different time frames. Okay, choose whatever pair you want. Right, it can be gold, GJ, GU, S&P. Doesn't matter. You will find liquidity sweeps no matter what. No matter what, I guarantee you, without a doubt in my mind. And if you can't, you're doing something wrong, because this isn't even like a come back to me and let me know if you can't. It's like you are literally doing something wrong if you can't spot this, because this is how I make money. This is how thousands of other traders make money, right? This is how ICT literally came up with this shit. Like, it works, and it is in the market, and it's how the market fucking moves. It's like, it is how the market moves, and I don't care what you say, it's nothing else. This is how orders flow, this is how the shit moves, and you can see it on the chart. So that's your homework, all right? Quick little day today, all right? Get your homework done. If anything, keep going a little bit harder, right? Make sure your motivation is up. We got a new week ahead of us, more things to learn, more things to strive for, all right? Let's keep it up.
Yes,
For the people that have stayed with me this far, right? We're already past week 1, so now it's really just the disciplined ones staying in here. I know it's hard to keep up with a video every single day, but hopefully you guys have been able to do it. I appreciate you guys. I got friends out in the pool, and here I am making a YouTube video for you guys, so hopefully you guys can appreciate the time that I'm putting in for you. It really does mean a lot. I've been seeing numbers go up, and I love to see it. I love to see you guys learning, and I love to see you guys posting on like TikTok, adding me on TikTok, adding me on Instagram. Love to see it. Makes me very happy, showing me that I'm making an impact on your guys' lives. So with that being said, I'll see you guys tomorrow. Peace out.
Okay, anyways, now let's just look at the charts for a bit more. How do I remove this blue fucking line, bro? I don't want to see this. Okay, anyways, so right here, yeah, whoa. Shh. Right here as well, look. Boop, boop, boop. But it's not like it does that every single time. Like right here, like we swoop this to sell off, but something like special. Let's go into like hourly time frame. Yeah, we had something like that right here. Boom. Psst. Right here too. We touched this. Boom, boom. We can say that for every single one of them. Like, yeah, right here, yeah, we had this low, and yeah, we did not break. I mean, right, we did right there, but not right here. Alright, well, it's been an hour. I'll be ending this video right here. I'll come back maybe in like 30 minutes, 45 minutes, and record another one. So, I'll see you guys in a bit. Love you all.